Hey everyone, welcome back to the channel. And today we are talking about the best buying opportunities in Maryland if you're considering purchasing a home here in 2022. And let's jump right into it. Hey everyone, welcome back to the Living in Maryland channel, where we talk about all things living here in the great state of Maryland. So if that's the kind of information that you're looking for, then you are definitely in the right spot. And we really appreciate you being here. And if you are considering making a move here to Maryland, if you're wondering whether purchasing a home may or may not be the right decision for you and your family, we absolutely love helping people with that transition, answering any questions you may have, and just kind of discussing your options to see what's the best fit for you and your family. However you feel most comfortable reaching out, we'd absolutely love to talk to you, whether that's by phone, email, or text message, days, nights, and weekends. We've got your back when moving here to the great state of Maryland. All right, so today we're talking about what are the best buying opportunities here in Maryland in 2022, and should you buy a home at this time? Is that the right decision for you and your family? If you are coming here to Maryland from out of the area and you really don't know what your time horizon is, or maybe you're only going to be here for a year or two, renting, I think, is something that people should seriously consider. I think especially during these times, if you have a longer time horizon, purchasing makes a lot more sense, and it's a lot more safe, and there's kind of peace of mind with that decision, just kind of not really knowing ultimately where things are going. But the first thing that I want to start off with is talking about inventory. So inventory has been on the rise here in Maryland. We're definitely still in a seller's market, but if you are a seller in today's market, you can't just stick a home on the market or any home on the market and expect it to sell in the first weekend with multiple offers. Things have definitely kind of leveled out and slowed down in that regard. So if you're a seller with a super move-in ready home, it shows really well, and you're priced right, those homes are definitely still going to move pretty quickly. But if you don't meet one of those criteria as a seller, it's very likely that that home could be sitting 3, 4, 5 weeks on the market. And especially during this time, we're in mid to end of August. So in the summertime, ironically, things slow down a little bit. It's definitely usually busier in the springtime, but right now there's a lot of people traveling during the summer. You've got people taking their vacations and kind of lining up schools, and by the time we head into late summer, buyer activity has slowed down because people don't really necessarily want to make their move after school has started if they don't have to. So things are slowing down. There's less competition if you're a buyer, so that's definitely a good thing. And then rates, of course, is always something that we're paying attention to. However, it appears that interest rates have stabilized, which is a good thing. They've actually even come down a little bit off their highs. So for the first, I'd say 5 to 6 months of the year here in 2022, interest rates were increasing on average about 1/2% each month, and that was kind of an unpredictable environment to be in. But they do appear to have, they're not really doing that anymore. They've even come down a little bit off of their highs of around 6.25%. So that's all good signs if you're a buyer looking to get into the market and consider if purchasing is the right decision for you and your family. All right, next opportunity for buyers to definitely keep in mind in this market is going to be seller concessions. And seller concession is really just a seller credit. It's the seller giving the buyer money to use really towards almost anything except the buyer's down payment. So depending on what type of financing you're using and how much you're putting down, the lender will restrict how much credit from the seller you can get. But if the home doesn't sell in the first week on the market, this is something that we've definitely been seeing coming back. A year ago, unfortunately, it wasn't even in the question. It just, there was so much competition that the sellers, they just didn't have to give a credit to any buyer. They would just go to the next one who wasn't asking for it. So, but now that the market is neutralized and kind of stabilized a little bit, we're definitely seeing this come back. And the cool thing is with interest rates being, higher than they were 6 to 12 months ago, one thing that we're seeing a lot is using a seller credit for the buyer to purchase or buy down the interest rate. So you can get that interest rate from say 5.25, 5.5 down somewhere maybe into the 4s, to where it makes a little more sense for the buyer and to get closer to that monthly payment that the buyer is aiming to get towards. So that is huge. That's something that we've seen. Another thing that I always recommend to buyers, depending on what program they're going to, if you're not putting 20 or more % down and you have some version of PMI or mortgage insurance with the financing that you're using, is seeing if you can buy out the mortgage insurance. This can save you, a couple $100 a month depending on what program you're using. Now, FHA does not allow you to buy out the MI, but if you're going conventional, there are buyout options, and this is something definitely to explore and that you can use a seller credit to do. So just to give you an idea of how much mortgage insurance or PMI costs, they're really the same thing. On an FHA loan of $500,000, PMI is going to be roughly $350 a month. So that's a big chunk of change for an insurance policy to really protect the bank against buyer default. If you're going conventional on a $500,000 loan and you have solid credit, because the difference between conventional and FHA is that FHA has a flat PMI calculation no matter what credit or situation is. Conventional tiers the cost of MI based on credit, based on how much you're putting down and other factors. So on average, on a $500,000 loan, PMI could be $150 to $200 a month, depending on credit and the whole situation. So using a seller credit to buy that down, or really just buy it outright. So you pay a one-time fee at closing, and then you don't have that anymore if you're going conventional. And conventional gives you a lot more options when it comes to mortgage insurance. FHA, unfortunately, it doesn't. You have to just pay it for the life of the loan. So ultimately, people are having to refinance out of FHA into conventional to get rid of that PMI. So another way that you can really utilize a seller credit to get that payment down, because ultimately that's kind of one of the biggest hurdles for buyers right now is getting the payment down to where it would be 6 to 12 months ago. So using the seller credits to kind of get creative and get that payment lower is something that you can definitely use a seller credit for. And the next opportunity would be new construction. And this is something it's a completely different animal from resale in regards to, costs and timeline and all that kind of stuff. Your average new construction can take 6 to 12 months, from actually signing a contract. But if you have that kind of timeline available, new construction is something that has definitely settled down. So, 6 to 12 months ago, we've never seen this before, but new construction actually, they were kind of doing bid style on their properties too, just because things were so competitive. And new construction was kind of that one constant where if the market got competitive, you knew you could always go new construction. It was more of a first come, first serve type of environment. So even new construction got a little crazy during the height of just the competitiveness within the market between the 2 years following COVID. So that has settled down. It's more to more of a first come, first serve basis. Again, they're having more and more incentives because new construction is going to naturally have to compete with, resale and existing homes on the market. So they're going to have to compete and make themselves more attractive to the consumer in this higher interest rate environment as well. So if new construction lines up with your timeline, if it lines up with your price range, there are more incentives today with new construction than there were 6 to 12 months ago. So that could be something to discuss and kind of look into. That's where there's more opportunities today than there were 6 to 12 months ago. So that's something to look into as well. All right, everyone, thanks so much for watching. If you have any questions about the market in Maryland currently, if there's anything I can do to assist or help out, feel free to comment below or reach directly out. We'd love to have a conversation with you, and we will see you at the next video.